Hello, welcome to the weekly technical analysis review for Monday, June the 10th. I'm Fibonacci at XM.com, and this week we're going to be looking at the pound dollar, the euro yen, and the dollar Swiss franc. So let's start first with the dollar pound dollar pair. We can see that the bullish picture in the short term is fast turning to a bearish one. Stochastics there, we can see there's a bearish crossover with the percentage K and percentage D lines. RSI is also pointing downwards. So if that decline in prices continues, the nearest support is the 78.6% Fibonacci retracement at 1.2420 of the uplift from 1.2424 to 1.3381. So that level is around 1.2629. If that support is breached, we then got the lower Bollinger Band, which is at 1.2558. That also happens to be the 5-month low touched at the end of May, and if that level is broken as well, we could then see pound dollar heading back towards those lows touched earlier in January. If though we do see prices recovering, the nearest resistance to the upside is the 61.8% Fibonacci retracement at 1.2789. We then have a series of key lines. We've got the upper Bollinger Band, the 50-day moving average, followed by the 200-day moving average. So the key area there is the 1.29 handle. If prices manage to recover above that region, that would shift the short-term picture to a decisively bullish one, as well as the medium-term picture from the current bearish one to a more neutral one. So let's now turn next to euro yen pair. We can see the short-term picture is relatively bullish. RSI is rising, but hasn't quite risen above the 50 neutral level. The MACD, we can see, although the histogram is above the red signal line, it hasn't quite turned positive yet. At the moment, prices are fairly flat on the day. The nearest support is the Kijun Sen line at 122.53. If that support is lost, we could see prices declining towards the Tenkan Sen line at 121.84, and then below that we've got the near 5-month low 120.78 touched earlier in June, and then that's also not too far from the lows of earlier this year in January of 120.38, and then if those key levels are broken, to the next major support to the downside would be 118.25, which was an important resistance and support level in the past. If though we do see that upside momentum continuing, we should watch out for the 50-day moving average at 123.90. Rising above that level would shift the short-term picture to a much more strongly bullish one, and the longer-term picture would also switch from the current bearish one to a neutral one, and then it will also open the way towards the Ichimoku cloud. We've got the lower barrier of the Ichimoku cloud at 125.20. That also happened to be a strong resistance level in the past. And finally, for today, let's turn to the dollar Swiss franc. We can see it's looking rather bearish in the short term, although looking from the RSI, there is an attempt for a rebound. Prices are at the moment hovering around the 0.9894 level, which was a low from back in March. If we do see prices heading higher, the nearest resistance should come at the 78.6% Fibonacci retracement of the uplift from 0.9894 to 1.0235. That also happens to be near the 200-day moving average at 0.9967. So crossing that level would help ease the downside pressure and would shift the focus to the parity level, and we've got a 61.8% Fibonacci at 1.0024. Crossing that as well would open the way towards the 50-day moving average, as well as the 50% Fibonacci at 1.0064, and that would also return the medium-term picture from the current neutral one to back to a bullish one. If though prices drift lower, we would first see a test of that 5-month low of 0.9853 from earlier this month. If that level is broken, it would open the way towards 138.2% Fibonacci at 0.9763 before attention turns to the 161.8% Fibonacci extension at 0.9682. So that's it from me. Thank you very much for watching and have a great day.